Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 30th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement in your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, one last thing is please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Economic data across the pond, we got a little bit there in the form of German import prices came in lower than expected. German consumer prices also came in lower, which is good. Anytime the import prices are lower, we want to see consumer prices lower, meaning that we don't want to see that divergence in a sense. And with French consumer spending came in slightly lower than expected at 0.5%, expected to be 0.8%. And GDP came in a little bit higher for the French at 0.4% versus the expected 0.3%. Flash consumer price index for this for Spain came in at 1.9 versus 2.1, lower than expected there. Remember, that's consumer price index as well. And then here in the United States, we got a lot of economic data that's pretty important. We got core PCE price index, and it came in at 0.2%, higher than the expected 0.1. Personal spending came in at 0.4%, was expected to be 0.4%, so right in line there. And then personal income came in at 0.4% as well, in line with expectations. Core PCE is the personal consumption expenditures. So personal consumption a little bit better than expected there. Then we also got consumer confidence in the United States came in at 117.9, was expected to be 120.1, so lower than expected there, and they revised the consumer confidence down slightly from last month's reading. Anyway, on to the overall markets. We've got crude oil futures coming back off still, 53. As a matter of fact, somebody was calling for $45 a barrel. Oil, that's pretty close to in line with what my target is for it to come back down and test the 61 fib level, which kind of lines up with this volume node. If we start getting much below this point of control where the most time and volume spent, I think 47 is going to be acting as one support level and then go back down to about this volume node right here, which is right around $45, $70, $46. So my targets are a little bit higher than theirs, but somebody was calling out $45 a barrel. Crude oil. Anyway, on to Goldman Sachs, on to gold. And I was thinking that it might have been Goldman that called out that $45 barrel, but I'm not sure, so I don't really want to throw that out there. But gold futures coming off today by about 6 points on the day, and just kind of stuck right here, point of control, which, where it is finding its safe area, if you will. Now, bonds look to be up on the day for the most part with this candlestick here. They are slightly, albeit chart looks a little funky, but at the end of the day, they're slightly up. Everybody not really in the bond buying into these equities being at historical high like we see here in the NASDAQ. NASDAQ up 6.5 points, if you will. They are one of the few ones that's up on the day. S&Ps were down on the day earlier. As you can see here, slightly down on the day. All intents and purposes, it's going to end up looking like a just trending sideways, if you will. It's not really an inside day, but at the end of the day, trending sideways can't get through the value area low from Friday, but is pretty close to unchanged as we speak, just making the new intraday high just a few minutes ago. But anyway, let's move on to a couple of headlining news stories, I guess, if you will. The big race for Amazon and Google to 1,000. Well, here it is. Amazon won the race to 1,000, albeit it's back below that now, but went up there and printed early this morning. So Amazon won that race, just even though it is a completely arbitrary number in all aspects of talking about these businesses, but that's what everybody's talking about in the headlines, so I thought I would mention it anyway for people that are kind of keeping track of that, if you will. Onto a few things that I've done with NUGT. As you can see here, it's got really high implied volatility percent. NUGT is the gold miners index. It's a bull, 3 times per share, so I don't think it's that bullish. So with gold, I don't think it's very bullish. So I decided to go in there and sell some calls in NUGT because I don't think it's going to go much higher. I think it's actually going to want to trade to the downside. It's still in a very bearish pattern. So I've got a little bit of wiggle room. If we get up above this area right here at about 40, what is that, $46, $47, get above $47, I'm going to be looking to get out of that because then that pattern that got me into this trade has been broken. So that's what I'm looking at for that one. But continued lower lows and lower highs in NUGT is wanting me to kind of step into the game here. And so I went into the July and sold the 50 calls, and I was able to collect 96 cents for that. So looking to get about 50% of my max profit on that. See some volatility come out of this or a directional move to the downside. I'll be able to probably get out of that one relatively soon. But like I said, looking at $47 on NUGT to get out if that pattern gets broken that way. Then with PepsiCo, another thing, Pepsi just making all-time highs, just really blasted off to the upside, heading into their dividends. But at the end of the day, the market really rallying for Pepsi. Thought I'd take an opportunity to step into the game and sell some high premium in this product. So I went into the July and sold the 125 calls and was able to sell it for 57 cents. So 125, $7 higher. I'm feeling pretty good about that one. I'd like to see some volatility come out, and this maybe even just trade sideways. It's getting a little thin up here where there's been not a lot of volume been played up in here. Maybe we've gotten some time up there, but the overall market isn't really looking to accept these levels. So I think we could see a bit of a pullback coming here, at least come back down and test this like 115 area. So a couple dollar pullback would be nice for me in that trade, selling those 125 calls. That's what I'm looking for. Little directional move, a little bit of volatility to continue to come out of those. Usually we don't see the volatility starting to increase this soon after earnings, but we are kind of seeing that with Pepsi. So trying to take advantage of some of that high implied volatility, get a little bit better premiums for it. Now, SPY, this is a trade that I had put on a while back, and I sold the June 230 puts, and I originally sold them for 88 cents, was able to buy those back for 25 cents today. It was actually on Friday working about a 35-cent bid for quite a while, and just decided to pull that trade a little bit early. So just waited for the weekend to let some of that data come out of it, and that worked out quite nicely. Ended up saving myself 10 cents for that, so able to cover that one for a little bit better than 50% of my max profit, which is usually my target on these, but they just weren't giving me that trade. So I wasn't willing to give up the penny for that one. So it worked out quite nicely. Then on to Apple. Now, if you guys remember, I have a synthetic long in Apple, and I'm long the 155 calls, short the 150 put, or 155 puts. So created a synthetic long, just lockstep with our webinar on synthetic longs, how to build those out properly and increase your probability of success. Well, with this, when I built that out, market actually started pulling back a little bit on me. So I went in, got a little bit mechanical with this, tried to lower my overall basis on this trade. And originally what I did was I went into the June and sold 160 calls in there. And I sold those for believe it was around 80 cents for those 160 calls. 87 cents is what I originally sold those 87 calls. Sorry, the 160 calls I sold for 87 cents. Was able to buy them back this morning for 42 cents. So right around 50% of my max profit. But what I did then was able to roll those 60 calls really up and out to the 65 calls and collected another 74 cents for that. So all in all, rolled out of the 60s and up to the 65s, collected another total of about 32 cents for that roll. So increasing my probabilities of success by moving that up and out in time, collecting more premium, lowering my overall basis. So pretty happy with that trade, the way that's working out, just like we kind of write it up. Sell those covered calls if it's not going against you, stay mechanical, collect some premium, lower your overall basis. So now, I've collected about a total of the 32 cents from today's roll and the 80 cents from before. So my break even is well below I initiated that trade. So I am now in a profitable situation despite the fact that we pulled back by $1 since I set that trade up. So looking good on that front there. So at least staying mechanical and staying ahead of the game on that for those trades. And I think that's about all I've done for today. I've got the Dow Jones up there on the backside, but Dow Jones off a little bit today, leading to the downside really of all the equities. So that's all I got for you guys. Friday's webinar is going to be doing risk reversals, how to use these different types of trades in order to increase your probabilities of success, lowering your overall risk in your portfolio as well. So stay tuned for that one. Go to protraderstrategies.com, sign up for it. I think a lot of people got a lot of good stuff out of last week's webinar, so you can check that out too. All right? If you can't take that, take it easy.